So today is our first session, which is introduction about the boom and crash synthetic indices. I'm going to say welcome in this course. First of all, I'm going to ask from you people, how many members you are aware about the synthetic indices? And are you new in the synthetic indices?
So
Yes,
I
I'm
know
new
it.
in it. I don't know about it before.
Okay,
I'm
you
new
don't
in
know.
it.
Sorry, it's
Yes.
Russell. I am new.
You are new. Okay, Idris, do you know
Yes, sir.
about?
No, sir, I'm also new, sir.
You are new. Okay, Santosh.
Yeah, me too, sir. I'm new, sir. I don't know. I'm a
Okay, it
beginner.
means all the members are new on the synthetic indices, right?
Yes, sir.
Okay, don't worry. This market is very good market, and we will cover all these topics in this market for the trading. And I'm going to introduce you this market. Synthetic market. Everyone knows about the Forex market, right? The Forex market
Yes, sir.
movement is based on the strength of currency. When the currency strength is greater, the market can move in up direction. When the strength is getting weak, the market can move in the down direction. And there is a comparison of the two currencies in the Forex. So which will be two currencies? How, for example, that is the euro, which is a currency, right? And then USD, which is another currency of another country. The two currencies, if this is getting strong and this is getting weak, then price will move in up direction, right? And when it is getting weak, the price can move in a down direction. So this, we can say it is a real-time effect on the chart, on the currency pair. But this synthetic market is a different than this real-time effect of the currencies. So real-time effect, you can say it can be the technical effect, technical analysis effect. It can be the fundamental effect. It can be any other news or whatever. But the synthetic market, these type of market are simulated algorithm based. This market is generated on the random numbers. So synthetic, in other words, you can say it's an artificial market. Now the question arises, you can in your mind that it means that this market is generated by the binary.com or derivative which we are trading. No, there is a third party which is providing the data and which is the 95%, you can say, related to the real-time data. But the real-time data is generated with the randomly generated numbers. And these numbers generated from the computers. The market look like the same as compared to the Forex market. But in the Forex market, when the news appears, when any event appears, market, you will see the big candles, big movements. If there is an uptrend, if the news is negative, market suddenly drop down. Or if the news is positive, market is in a downtrend and it is shout in an uptrend. So these effects you will see in the Forex market. But when you will select the synthetic indices, you will never see these type of effects. Market is running smoothly as per the price action concepts. So what are the price action concepts? You all are the traders, you know the support and resistance, trend lines, chart patterns, candlestick patterns. This type of market flow, structure of the market, this market is running with the same that structure. But just keep in mind that this market have no effect of the fundamental, only it is generated with the price action with the randomly generated numbers. This randomly generated numbers generated by the robotic math, like a PC program. So the same pullbacks you will find in this market, the same downtrend, the ranging market, the uptrend, the consolidation, the congestion, everything you will find in the same market. What is not affecting on this market? That is the fundamental part. So everyone is aware about the fundamental part. Which is the fundamental part? Can anyone tell me?
Basics of candles.
No, it is not a fundamental. The basic of
Fundamental
the
means depends on the
It's a
news.
strength. It's a strength of a currency, like USD is much stronger than JPY, like that.
Okay. Another can give me the fundamental
Based on
effect.
No, strength of the candle is more than momentum.
Okay. Momentum. Okay. No, still,
No, it is based on news, sir. It is based on news.
still I'm
It is
not
based on-
satisfied from any answer. Anyone other can tell me?
So can you hear me?
Yes, I hear you, brother. Pratik, I
So
hear
it is
you.
based on news. It is based on demand and
Yes,
supply,
the
import,
fundamental,
export.
that based on the news, based on the company financial statements, are the currency financial statements. The financial statements show you the strength and weakness, right? And news also show you the negative and positive impact of the currency. So in this market, you will never feel the fundamental effect, only the price action effect, which is easy to understand. If the pattern of the chart pattern formed on the chart, you will understand how the trend can change. And if a trend form, you will understand the trend is formed here, but you don't have a fear of the news, of the event, that if on the any time a news appear, market will change the direction. So there is no effect of the fundamental on this indices. That's why these indices are more easy than the Forex market. So difference with the Forex and synthetic, you understood. The Forex data movement is based on the real-time currency effects, currency strength and weakness, but the synthetic market is based on the price action concepts, price action rules, and that market is totally generated with the price action concept on the robotic math. It will show you the same type of market like a Forex. In the chart, I will show you when you will see the H1 chart or H4 chart or day one chart, it will be the same market, but you will never find the news effects, which there is no influence on this market, right?
Yes, sir.
Hello, sir.
Yes, brother.
Sir, in IQ option, we will mostly trade on EU or USD. Means the trading will be depends upon the currency pairs. So what will be here on the synthetic indices?
So here there is
Which
an
pair will
index.
happen?
There is an index which will be the different name, like a boom 1000, boom 500, crash 1000, crash 500. The algorithms of these indices are based on the price action. It will be the same. Only the effect of news you will never find in this synthetic index. Everything will be same. But there is a 2 points, which will be if the demand increases on the Euro USD, what will happen? If the demand increases, the market will move up, right?
Yes, sir.
Yes,
And
sir.
this demand denotes that the buyers are interested too much, right?
Yes.
Yes, sir.
And these buyers are real time. Anytime it can be increased, anytime it can be decreased, right?
Yes, sir.
Yes, sir.
So demand and supply, what denotes? It means that it is a behavior of the buyers and sellers. Anytime it can be increased, anytime it can be decreased. And this behavior is based on the positivity of the patron, positivity of the currency pair, right? So
Yes, sir.
this demand and supply we can use in the synthetic indices, but it is not based how many people they are purchasing or how many people they are selling. It will be not effect. It will be not effect. But in the real-time currency pair, the demand and supply have a meaning right here. If the buyers not are there, but if there is a pattern of W, right? For example, it is a double bottom pattern. This double bottom pattern is show you that the market will move up, right? But if the demand is not there, then this will be failed after some time. But if you find the pattern W in the synthetic market, mostly it will move up because it is a pattern. And there is no effect of the demand and supply, no effect on the news. That's why this price action pattern will work for you here, right?
Yes.
Yes,
Okay.
sir.
So in upcoming classes, everything will be clear. It is just an introduction. Don't be confused with this market and this market. But this market, just to understand, it is a artificial market which don't have a effect of any news. But don't think that this market can be manipulated. No, this market cannot be manipulated, because in between the broker, there is a third party which is providing the generated numbers of the market patrons, and the broker does not know what will happen next. And broker cannot manipulate this market. The first question every trader's in the mind, that broker can manipulate. Why this manipulation come in mind? Because of the binary option. And where there we are using the 1 minute trading, and so many times we have failed. That's why we are saying the broker is manipulating the data. But in the binary option also, broker is not manipulating. The binary option, what the data from the supplier binary option broker is getting, who is showing the same data on the platform. We need to understand in a clear. So here there is no issue of the manipulation. Okay. So why we are trading the synthetic? Definitely there will be the benefits. So these all benefits we will talk in the upcoming slides here. So the pairs in the synthetic index which we will trade, that will be the boom and crash. The boom have a two pair. Boom have a two pair. Boom 1000 and boom 500, and crash 1000 and crash 500. So how many pairs we will trade? These four pairs we will trade. The boom 1000, boom 500, crash 1000, crash 500. The structure of the boom and crash 1000 is the same. These two structure of currencies are the same, and the structure of boom 500 and crash 500 is different in the return. Not different in the appearance, but difference in the return. If you are getting too much profit in the boom 1000, it is possible you cannot get the too much profit on the boom 500. So this difference we will talk later. Okay, here the structure of the boom and crash, how it is on the chart. See, you will find the candles on the boom which is moving down. A 1 minute candle will move down in a similar way. All the candle size which is moving in a downward will be the same size of the candle. After some time, when so many candles will move down, or sometimes very few candles will move down, then you will get a one spike. The spike which will be bigger than these 1 minute candles, and this spike is also 1 minute. So the structure of the boom and crash is based on the tick and spike. So this is tick. Tick is what? Every minute candle is your tick, which is moving against in your direction. And when the spike will happen, the market will cover so many candles only in a 1 minute. So here, so many minutes. How many? 1, 2, 3, 4, 5, 6, 7. 7 minutes take a small movement in a downward. A 1 minute which is spiked, it is bigger than these 7 minutes. It can be the 10 candles also possible. So 10 candles distance, in how much minutes it's covered? 1 minute. So on the boom, we will buy these spikes. We will figure out where this spike will happen. We will find out in these candles if our analysis will be right. If we entered here after waiting of 1 minute, when the next spike happen in this market, we are getting the profit of how much minute? 10 minutes within the 1 minute spike. So these structures of the spike and tick, same you will find in the crash, where the price will move up in a 1 minute in this direction in the crash pairs. And when you will find the spike, it will be bigger like this. So if you calculate this 1 minute candle moving in up direction, it takes approximately 10 minutes. When a spike happen, it covers all the 10 candles distance in a 1 minute. So what you need to find, you need to find these spikes where we need to enter for the spike to get a good profit, a big profit within the 1 or 2 minutes or 5 minutes, within the 5 minutes. So here you just understand that this small candles is a tick candle, and the big candle, this is a spike candle. And the algorithm of the boom and crash based on the up spikes and down spikes. In the boom pairs, which is the boom 1000 and boom 500, you will find this up direction spikes always. So what we need to do, we will buy in the boom and we will sell in the crash. Also, you can sell in the boom and buy in the crash, but it will be very risky. So the risky trades we will never trade. Okay. So what is the difference between this tick and the pip? It will be the same, not too much difference. In the Forex market, when the price is falling down, or price is moving in up direction, a distance from this area to this area, it can be the 2 pip. It can be the 2 pip as per the currency pair. Same, here we are counting not a pip, but here we are counting the ticks. So these ticks, when we will calculate within the 1000 ticks and within the 500 ticks, so there will be the so many ticks within the 1 minute candle. It can be the 5 ticks in the candle, maybe the 10 ticks in the candle. It is based on the structure of the pair that which we are selecting. 1000 we are selecting, or the 500 we are selecting. So within the 1000 ticks, you will find the one spike. But sometimes when the trend is generated within the 10 ticks, within the 20 ticks, within the 100 ticks, you will find again and again so many spikes. But for sure, you will find a one spike within the 1000, in the boom 1000 or in the boom crash 1000, and 500 ticks, you will find a spike within the crash 500 and boom 500, right? So what is the reason why we are taking these spikes? Can anyone understood why we are taking the spikes trading?
And the risk reward ratio is better trading the spikes.
Okay,
Instead
the
of
risk
trading
and reward ratio is better than the 1 minute. 1 minute, it is taking the 10 minutes to move down, and within the 1 minute, it is moving in more than 10 candles. This, as compared to this risk and this reward is too much bigger than this one candle, right? That is the one benefit. Okay. Any other member? Yes, Harish.
Yes, sir. The nature of this boom and crash is going in one direction. The
Okay.
tick is going one direction. So if
Yes.
we determine the trend,
Yes.
so we can easily understand where spike can occur.
Okay. Okay. So spike, it means the spike trading is better than this small 1 minute candle trading, or this spike trading is better?
Spike trading is better.
Okay. Okay. So many examples I will share with you in the upcoming slides, right? Here, everything we understood about the boom and crash structure of the tick and spike. The tick structure and spike structure is clear?
Yes, sir, but we would like to see it in the chart.
Okay, okay,
So
okay.
it will
Sir.
sink more.
Yes, brother.
Yes.
Sir, can spike be smaller than tick? One spike, then the
Can be
can be.
sometimes when
Okay, sir.
the momentum, if you are in a strong downtrend, in the strong downtrend, just there is a psychology. Who is stronger in the downtrend?
The
Sellers are
sellers.
stronger, right? And if
Yes,
the
sir.
buyers trying to move in up direction, so it can be the influence from the sellers. The sellers are trying, the buyers cannot move up. So it can be the spike, can be the miss. Sometimes, not every time. It means it will be the 1%. How many percent? 1%
1%.
out of 900. Okay.
Sir,
Yes, brother.
in currency pairs, if sellers are getting less, so the candle will be getting less, and we get a higher rejection of buyers. So in this, we won't get wicks, and candle size is reduces.
Here you will never find the wicks.
Okay, okay.
So your candlestick psychology don't need to trade in the synthetic indices. There will be no candlestick psychology here.
There will be wicks, but unless and until you go above 15 minutes charts, you won't find the wicks on the candles, on the 5
Yes.
minutes and 1 minute chart, right?
Okay. So now what are the benefits of the trading boom and crash? The Forex market, how many days you are trading? 5 days in a week, right? This market, you can trade 24/7, 365 days. No time limit, no session closing, no overlapping of the session. Every time non-stop it's running. That is the one benefit. When you will get free, you can trade any pair without hesitation. And in the Forex market, you are facing the fundamental issues, the news issues. But in this market, you will never face the fundamental issues. The chart in the Forex market are very confusing, right? But in this market, the charts are based on the price action concepts. You can easily understand. Sometimes it's difficult to understand, but if you practice and if you work hard on these charts, you will understand easily when the trend can change and when I can go into the trend, right? So here, this benefit, very much less criteria for analysis compared to the Forex chart. When you are comparing as compared to the Forex and synthetic, the synthetic is easy to analyze the chart as compared to Forex. Forex are very difficult to, because there are so many concepts, so many chart patterns, so many candlestick patterns we need to know to identify in the Forex market. But here, very simple analysis, it can give you the good results. And there is no need of candlestick analysis. Here only you identify the trend and the area where the trend is trying to change in the boom and crash. Okay. So these benefits, everyone understood?
Yes, sir.
Any confusion on these benefits?
No, sir.
Okay. So
Sir, one small doubt.
yes, brother.
I don't know if anyone feels unhappy. I'm sorry. I want to clear all my doubts. What is in my heart? So, sir, when does this implemented this boom and crash?
Can you repeat again, brother?
Can I speak in Hindi?
Yes, you can.
ये boom and crash कब इन्वेंट हुआ सर? ये मीन्स 10 साल पहले, 20 साल पहले, कब से शुरू हुआ सर ये?
Yes, ये ब्रोकर आज से 19 साल पहले इसने सिंथेटिक इंडाइसेस जो है ना वो किया है, अनाउंस किया है, मतलब मार्केट में लॉन्च किया. So this broker 19 years before he launched this synthetic indices. So binary.com broker is a too much old broker as compared to other brokers. So 19 years, it is a big time, right? In the
Yes.
1999, he launched these indexes. So here, understanding the market, how we can understand this market theories. One thing, it can confuse you, which I'm going to announce before to clear all these points. Before joining us, our course, definitely you tried so many strategies on the YouTube about the boom and crash. So those strategies are too much confusing. With those strategies, you cannot analyze the market. You need to understand the market structure. After understanding the market structure, create your own strategies. And those strategies is based on your trading method, trading style. You are a big trader or you are a very small type of trader. Your investment is very small. Your investment is very big. Everything, it is based on your style of the trading. So if you have a small capital, then you must be a scalper trader, not a swing trader. The swing trader, it requires the too much amount in the deposit. And the swing trader, when he is expecting the too much profit from one entry, definitely he will wait too much if the trade is going against his direction. But the scalper is what? Your market is moving in this direction. For example, it is a down direction, right? When market moved up, your entry is here. How much you can bear the loss from the previous high, and how much profit you can take when the price give you the new lower low. Below the lower low, you will take your profit here. So it can be $3 loss and $9 profit. It can be scalping. It can be scalping. If you are thinking that from one entry, I must take the $100 loss, $100 profit, right? Then how much will be risk as per your understanding? Can anyone tell me?
1:2 or 1:3.
1:2, 1:3. Definitely a $30, right?
Yeah, right, sir.
So if your account is credited with the $50, your investment is how much? $50. Then this option you will select, or the second option you will select?
First option.
First
First option.
First option. So the method of trading, the style of trading, we will select as per our investment. So when you are depositing very small money, then you must be a scalper, right? But if your investment is too much, like above the 500, above the 1000, then you can be the swing trader. So if your investment is small and you are thinking about the swing trader, you will be failed. Because a $30, when it's moved against your direction, this $50 deposit, it cannot bear. You will get the margin call. So now what is the margin call? These things we are going to discuss. But you just to select your style, which is your style, which type of you are trader, right? And don't select any strategy from the YouTube. The YouTube strategies, mostly you will be trapped. So don't use any strategy from the outside, which you learn here, apply those things and create the strategies from those education and then apply in the market, and must be understand yourself that which type of trader you are. And then when we are calculating the profits, when we are calculating the trading lots, how it will be differ from the Forex market. In the Forex market, when you have a $50 in your account, you cannot purchase the one lot, right? Very small lot you need to purchase. Here, there is a difference. So one by one, we will discuss each and every point. What is the equity, margin, lot size, spread, tick volume, risk to reward, everything we will discuss here. Okay. Any question from here? Okay. So this is a balance, right? Balance is what? Your investment. Here, this is a demo account, right? On the demo account, how much this is the balance? 9,470. Do you see any trade is opened here? No.
No.
When all the trades are closed, when there is no trade, this amount is showing what? It is your balance. Your deposit amount. The deposit amount can be increased, can be decreased, but currently it is showing the current value of your account is 9,470. So here, the balance reflects your profit loss from closed position. Closed position, it means that there is no open position here. On the chart, there is no open position. So the position is not open here, right? After that, this is your equity. Now, when the position is not open, the equity is same as like a balance, right? And free margin is same, which is your balance. Now, these three prices are the same, right? Let's see. Now we are going to place a one trade here. This is a one lot we are going to sell in the crash 500. When we are going to sell, see now. What was your balance? 9,470. Right? And your equity is now decreasing. We got a spike, so profit is now included. Now the trade is running and there is a price give us a spike. The equity is increased, right? From the balance. So when your trade is in a minus or is in a plus, equity will be different than your balance. When you will close the trade, so here I'm going to close this trade. Now my balance will be increased. See, I close this trade here. My balance increase, right? Again, I'm going to place a sale here. So now when my trade is again, so what's going on? Again, I got a spike here, but it's very little spike. So you can see now equity is greater than the balance because the trade, the current price is below my entry point. But if it is going against my trade, then this equity will be less than the balance. So here, the equity is what? The equity reflects that real-time calculation of your profit and loss. If your account is in a loss, after your entry, the price is moving in against your direction. And if your balance is 10 and market move up, you have a $2 loss, then how much will be your equity? $8, right?
It's yes, sir.
But if you have a profit of the two entry, then what will be your equity? $12, right? So this equity is based on your real-time calculation of the profit and loss. How many entries you are opened, how many entries running in a profit, and how many entries running in a loss. All these calculation after when the amount which is showing, which will be your equity. But equity does not mean that it is your balance. It can be increased, it can be decreased. When you will close the equity trades, when you will close all equity trades, if your equity is greater than the balance, your balance will be increased. if your equity is less than the balance, the less amount will be deducted from the balance. So for example, if your balance is 10 and your equity is 8, when you will close the trade, how much amount will be remain in a balance? 8.
8.
If your balance is 10 and your equity is 12, when you will close all the trades, how much amount will be increased in the balance? It will be 12, right?
12.
So equity, you can understand, that is a balance when the trades are running in a minus or are in a plus. It reflects your amount with the calculation of the running trades. Okay, now that is a margin. That is a margin. How much this is the margin? How many numbers are there? 18.90, right? How many trades we placed? 1. When I will place another trade, now see the margin is increasing. This margin is increased, right? So 2 lots, how much take your margin? $37 reserve. $37 reserve from where? From your balance amount. Because the 2 trades are running, this reserves from your balance. If you have a $50 in account, right? How many? 50. If the $1 lot reserves the $19, then how much remaining from the 50? 31. So you can buy from the 31 out of 50. Already you have a reserve of $19, right? Again, if you buy 1 lot and the another 19 will out from here, right? So how much it will be remain? I think 19, right? No, not 19. It will be
12, sir. 12.
Right? 12. So now again, can you buy 1 lot from these 12? It is possible? Because 1
No,
lot,
sir.
how much it will reserve?
19.
19. So if your amount is 12 remaining, so you cannot buy the 3rd lot because you have only $12, right?
Yes.
So how much you can buy? You can buy the 0.5. It is possible, right? And 0.5, how much it will take? 9, right? 9.5. So the margin is the amount which your trades are open, and that amount is reserved from your balance. So margin is your trading value which is reserved from the balance. Free margin is what? This balance is free. This balance is free. From this balance you can buy more. You can buy more or you can sell more. Margin level is the percentage of your balance, equity and the free margin. So we are not taking this one, but the free margin is a value which is not reserved. You can again buy from this value. When this value becomes 0, what you can do? You cannot buy, right? You can not buy. So used margin. This is a margin. Margin means trading with leverage, which can increase risk and potential returns. Okay. But used margin is a same which we bought or which we sold. The amount which is reserved from your balance, that is the used margin. The free margin, after subtracting the used margin from your balance, which amount is free, you can use as a free margin. Again, you can buy from that amount, right? And now the margin call is what? the margin call when your account at the $50, right? The trade is going against your direction, which reached to the $35 minus. How much minus is there? $35, right? There is a percentage which is set by the broker when it is reached to the 36, maybe. For example, it is not a true data. It's just for the example that if it is reached to the 36, you know what will happen? The broker will send you message. The broker, what will do you? He will send you message that you are running out of margin. You are running out of margin. If you want to keep your trade, then deposit again to increase your deposit. Otherwise, when this trade will reach to the $40 loss, we will close automatically. That is your margin call. Sometimes when you have a small investment and the trade is going against you, and automatically if the trade close, it means your trading reached to the margin call and automatically broker close the trade, because if it cannot be moved above from the 50, the broker cannot give you the more leverage on the trade. Your trade can be closed. So as per your investment, you will select the lot. If your investment is small, you cannot trade the one lot. You can trade the 0.5, you can trade the 0.3, you can trade the 0.2 as compared to your investment. So this will be our money management system, and we will discuss on it, if how much we have a balance and how much we can purchase and how much we can sell and how much we can expect a profit from our investment. All these things on the investment we are discussing in the upcoming slides. So from here, everyone understood about these topics: balance, equity, leverage, margin, or anything is confusing?
Sir, can you explain about leverage?
Leverage. Leverage is what? When we are purchasing the one lot in a Forex market, right?
Yes, sir.
A one lot can be purchased in a $250,000, right? How much?
250,000.
The broker is offering you the leverage, these types of leverage: 1:200, 1:500, right?
Yes, sir.
Or some brokers are giving you 1:100, right?
Yes, sir.
And when you open the deriv account, the deriv is offering you 1:500, right?
Yes, sir.
You are investing $1, and how much broker is giving you?
$500.
500. From $1 investment, you can purchase the 501 worth of equity, right?
Yes, sir.
So here, when we will purchase the one lot, when we are investing the $250, then we can purchase how much lot? One lot. These three zeros is your what? It is your leverage. That when you are investing $1, broker is giving you benefit of $500, you can purchase more, because if we are not using the leverage, that we cannot trade in the Forex market or in the also synthetic market. So leverage is what? Leverage is a debit, which is borrowed funds from the broker to amplify the returns from your investment. If you don't want the leverage, then how much you need to invest?
250, 250,000.
50,000, right? But with the 250,000, how much worth of equity you can purchase? 250,000, right?
Yes, sir.
So that is a leverage. Leverage, it means
If I
it
lose,
is a debit.
if I lose,
If you win, it will be $10, right?
yes,
If
sir.
you lose, it can be the $10. But these $10 from where deduct? From your 250, not from 250,000, right?
Yes, sir.
from your own amount, this minus amount will be deduct. When the
Okay.
$10 will be deduct, then broker will reduce your leverage as compared will be the 240,000, right?
Yes, sir.
So the profit, if will increase from 250 to 260, then again broker how much will give you,
260.
right?
Yes, sir.
So that is the leverage. Leverage is a debit, a percentage above on your investment which broker is providing you for the trading. That is the leverage. So in the other words, just to understand, the leverage is what?
Debt.
It is a
Debit.
debit from the broker, which is giving you, right? Any other member which have a confusion around these topics?
Yes, sir.
Yes, brother.
Sir, open the chart. I will show you something,
Okay.
please.
Yes.
Maybe everyone knows, maybe I don't know.
Mhm.
Let me know not you. So this margin here,
Yes.
if it is open position,
Hmm.
it can be the same.
Hmm.
If it is going against us,
Hmm.
yeah,
Hmm.
if we close it,
Hmm.
it will affect your free margin over here.
So this margin level
It's,
is
it's
based.
like,
Mhm.
just a minute, sir. It's like a hedging.
Hmm.
If it is against you,
Hmm.
so you can put opposite trade. It's
Hmm.
like a hedging.
Hmm.
It will not affect your free margin, which
Mhm.
we are getting another benefit,
Mhm.
like in Forex.
In the Forex, it
So
can be.
more,
Yes, yes.
yeah, for more percentage we have, so
Hmm.
more open position we can get. If you
Yes.
close this, if you close this losing trade,
Hmm.
so your margin will be reduced.
Yes.
If you close this losing trade, your margin
Yes.
will be, your next margin will be reduced.
Definitely. Definitely,
Yeah, but
because
if you
amount will be decreased.
if you don't close
Yes.
and keep it even now, if you go opposite direction, 2 more trade,
Hmm.
it will not affect your free margin.
Definitely. So here
So
we are placing the,
we can,
look at, we are placing the 2 buy trades, right?
yep,
So now the free margin is not showing, right?
yep,
Why it is not showing? How much amount you are getting in the up direction, the same amount is deducting from here, right?
yep,
Your losses cannot be increased now, right?
yes,
So now, if you close any one position from the upper side or from the lower side, then again you will see the floating margin, right? But now what will happen? This loss will not increase now. This loss will not increase, because one time you are subtracting and one side you are adding some balance,
Adding.
right? So your losses is not increasing. Your losses are
Yes.
not increasing, but there is no benefit. There is no benefit. If you get the spike here, so this spike benefit you will never get from here, because if the benefit you will see here, this will be also minus, right?
no, it will just about the margins.
Yes.
To save the free margin or lot size, maximum lot size you can save.
So now again, margin level is, it's floating, right? Because of the, if the balance is increasing against you, it will be floating. So this, you don't need to use this one, right?
Okay, sir.
You have only the balance, your equity, your free margin, or your reserve margin, or your free margin, right? The margin level, it will not hit you. Okay.
Yes, sir. Thank you.
Okay, so any other member which have confusion from this topic, because this is very important. When you will invest money, then you must understand that how much I'm in a profit and how much I can purchase and how much I can wait. Everything you must need to know.
Sir, the one lot size in boom and crash is $250,000, is it?
It
Or
is
is it
that example I gave you from the Forex market, right? The one lot, when we will purchase the one lot, how many dollars reserved? 19, right? See here. How many lots are purchased? 2. And how many margin is reserved?
37.
37.
37.
So $37 you required, right? To open the 2 lots. And this broker, how much giving you?
250?
150, 1:500, right?
So is it
30
500 or 250?
Not 1:500 giving you, right? If you are not taking the leverage, then how much amount you required to open the 2 trades?
37,000.
Right? If you are taking the leverage, then how much you require to open the 2 lots? $37, right? So without leverage, we need a huge investment. So no one can risk the $37,000, right? To purchase these 2 lots. That's why brokers offering you the leverages. Okay. Any other member which have a confusion? Clear?
I have one question, general question for
Yes,
everyone.
brother. Ask.
When we open the account,
Yes.
This broker also give us the offer,
Yes.
whether you used to go to 1:1, 1:200, 300, 500, 1000. Maybe this one is having up to 500.
Yes.
So no one is having clear scenario for this. Which one and how will be beneficial? 200 or 500 or 400, something like 1:200. When you
When
open
you
the
will-
account,
Yes.
it always asks you. So no one is having clear benefit about it.
Yes. Now you understood. When I clear that, if you are taking the 1:500, right? That your buying power will be greater. If you are using the 1:200, then your buying power will be reduced. So 1:500 we are using. That is a good ratio. Because with a small investment we can purchase more. But if you are selecting the 1:200, then your buying power will be very decreased. When your buying power will decrease, definitely your profit and loss will be decreased. Also loss will be decreased, profit will be decreased, right? So the leverage as much as greater, it is a opportunity to earn more from the market, and there is also another side, you can lose more from the market. So both options are available. So when you open the account, which leverage you selected?
I selected 500. So
500. It is a default.
to spread
The 500
to spread, yeah, default.
Yes, that is a default,
Default.
right?
To-
And someone, if
so
because there are
even
so
my
many
risk-
people, they are, you know, why leverage is important, or why some people's not using the leverage. When you will take a loan from the bank what will do? It will charge you interest, right?
Yes.
When you will take a loan from the bank, it will charge you the interest. That's why the bank is giving you the loan. Why the broker giving you leverage? On that leverage amount, when you will hold, the broker will charge you the interest, right? So broker have a benefit. But if you have an amount, if you have your own amount, you can hold your entries for the days. But you have a leverage. When you will take you will be applicable for the swap charges. Definitely, you will never bear the swap charges, other commission charges, so many charges. So when the broker is charging you the commissions, the broker is charging you the swap. In the another side, broker is giving you the leverage. That I am giving you the loan, a debit, which you are using. You are earning money from my money also. Your money is very small, but which I give you in the terms of the leverage, that is the too much, right? But don't be confused yourself with the leverage. If you will be confused yourself, then how you can purchase a big lots, or the how you can purchase again and again from the market. Don't think about it. It is a common question for the traders. The leverage ratio, it is just increase your power of buying. What the ratio you are selecting only, right? And when you are opening the trade, how much commission the broker is charging from you? That is the question. When you will open the trade on the Forex market, when you are opening a 0.5, right, entry, the broker will charge you on the one lot. There is a $3.5 something. Every broker have a different charge, right? This broker on the one lot will charge you how much? $0.17 on the one lot. And when you will open the lot of 0.2, how much it will charge you? I think it can be the 0.5 or 0.4 or 0.3, something like, right? So this will be the commission. This is what? It is a commission. Automatically, when you will open the trade, this commission will be added in your entry. And when you close this trade in a profit, your profit will be how much less? It will show you the difference here, 0.5% per trade. It will show you the less amount, right? So the commission of this broker is very, very small. It is not a big commission. And when you will hold for a 24 hours, how many hours? 24 hours. You will be charged on the one lot, how much? $1.5. This is the swap charges, $1.5. If you can hold more than 24 hours, it will be charged. But if you are not holding, this will be not charged. When the day is closed for the boom and crash, my time 5 p.m. 5 a.m. 5 daily in the morning, Pakistan time, PST time, 5 a.m. the day will be closed. If you are opening the trade on the 4:30 a.m., right? And then you are closing the trade on the 5:01, you will be charged the swap charges. So this time, keep in mind, on the 5 a.m. my time, you can calculate your own time. Here the day is changed. So if before the 1 minute, if you purchase, you will be charged the swap charging. So when you will trade, you just make sure that what time is there, right? The swap charges will be charged if you are trading 1 minute before, and on the next minute after, if you are closing the trade, within the 2 minutes, you will be charged the swap charging. So this time, and again, if you are opening the trade on 5:01, the next day 5:01, on the 5:0, the swap charges will be charged. So you have a 24 hours. Anytime if you charge, right? And you trade. So swap charges, understood, brother?
Yes, sir.
And
Sir Surekant here, one query. So this commission or whatever charges, this is applicable only on profit or also on losses?
On the
Like
both cases,
whenever we
even if it's a
the
profit,
cases.
even it's a loss. In the both cases, the broker will charge their money.
Okay. So
Okay.
it is as per transaction basically.
Every transaction, every transaction. This is a charge. The commission is a different, and the swap charges is a different, right? Swap means
Right,
when
sir.
the day close and your entry fall into another day. Okay.
The swap charges is the interest charge, or there's a separate
No,
interest charge also?
this is the holding charges. You are holding the trade more than 24 hours.
Is there
right?
any interest charge also?
Yes, you can say, understand that it is an interest charge. Why? They are charging because they are giving you the leverage, right? Because of the
There is
leverage,
around
they are charging
No,
you the
see,
swap.
understand these two concepts are different. One is a swap charge, which is a 24-hour shuffle of the shift. That is charged one time. If you fall into that trap or fall into that time zone, and if your trade is holding up in that time zone in between, you will be only charged then only for the swap charges. Otherwise, there will be a fixed commission charge on each transaction. That is a different thing. So there are two things. One is swap, and the another one is the commission charge, which is hidden.
Okay. So after this one, we have opened the two trades which are going in against our direction. So if I want to set the stop loss here, then what I need to do, right? What I will do, I will drag this line from here at the top side. So this will be it is my SL, stop loss. When the price will reach to this area, automatically my trade will be closed. And this SL price you will find here. And if you want to calculate what will be the amount of my SL, when you will move your cursor and put on the level, you will find information from here. See, what is written here? Profit minus 48. It means if the price is moving on your level, that you will be charged minus 48 loss from your balance. And if you want to select the profit level, a TP, drag at the lower side if you sold. So here, if it is our TP, and you can check how much it will be profit. 100,
around 5,
150. So if the price is coming back and it is hitting your TP, automatically trade will be closed, right? So a TP on the 1 minute, how it can be designed? So when we are moving to the 1 minute, right? See here. This is the 1 minute chart, right? I'm asking from you as per your experience. I purchased here, right? I sold here, right? When I sold here, I make the TP line here and SL line here. So when I got a spike, where my trade will be closed? On this price it will be closed, or in this price it will be closed? Can anyone tell me?
At the lower price, because the spike will be very fast.
This is my TP level, right? When it is crossing my TP level, the trade will be closed on the crossing level, or the trade will be closed at the closing of the spike.
Starting level.
TP
No,
level,
brother.
sir.
At the TP
No,
level.
brother. No, brother. On
I
the
think
closing
TP
At the
price.
closing level.
On the closing price, it will be, my TP will be counted, not on the crossing level, right?
Okay.
So this TP will be counted where? On the closing price of this 1 minute. So the TP will be counted when the price will close on the 1 minute, where your TP will be counted. If your TP is here, no problem, right? Your TP will be counted where? Here, on the closing price. And on the same on the boom, this is the crash 500, on the same on the boom, it will be same. So when after closing of the spike, your TP will be count. Right?
Right, sir.
Same like again, there is an example. If I open the trade here and I set my TP here, so which level will be counted? Number 1 or number 2? Clear yourself.
Number two.
Number
Number
2.
two.
And you don't think that if I'm selecting this TP and if a spike here, so I need to select this here. No. Whatever the spike will happen, it will be counted as a closing price, right?
Right, sir.
Okay.
Sir, on this 1 minute chart, how to drag stop loss and TP?
Same like here. See here.
Okay.
I'm dragging here.
Market is above, it will not go.
Okay, market is above. Yes. So here, right? I can drag up.
Okay.
So this will be my SL. So I'm closing here, right? So this is very close. Now we are going to see how the trade will be closed. See, when it will touch here, our one trade will be closed. This one trade.
I'm sure, are you all aware about the MT5 trading, right? How many of you are having trading on the MT5, MetaTrader 5?
Sorry, I don't have.
All right, then this would be
2.02, sir.
helpful.
Then this will be helpful for you. Look at that.
Yes.
This is our which point? SL point. SL means a stop loss. I cannot bear here,
Okay.
right?
Correct.
So when the price will touch this level, the trade will be closed. When you will start the trading, in the start, I'm going to tell you, when you open the trade, set your TP and set your SL. It is very important. Because when we are not setting the SL, then we are thinking, we are expecting maybe the spike will come, maybe the spike will come. Okay, from here, if not coming, maybe here from a spike can come. So the losses will increase. When you will open the trade, at the same time, you just to identify and you just to clear yourself that this will be my SL. So now this entry is closed automatically, right?
Right, sir.
So this is very important. Maybe when you are trading, your internet is cut off, right?
Correct.
And you are not accessing the market, then what you will do? So you will be, maybe you will get more, maybe you will lose more, maybe your account will blown. So it is better that when you will open the trade, select your SL and TP. Even if your market is closed from your side, from internet, any issue or a light issue, so your TP and SL line, if it is set already set, then when the price reach to these levels, market will follow these things, right?
Hello, sir.
Yes.
I have 2 dots.
Yes, brother.
Can I write here?
Mm-hmm.
So as you have said that we can close the profit here.
Yes.
So we doesn't know that how much the market will fall down. So I have taken here profit. So will it be take profit?
Yes. It will be the
One
whole
more doubt.
spike is your profit.
No, if I keep here, I don't know whether it will it take profit or not. We don't know how much it will go down.
Yeah, yes. This is your strategy, that how much you want to take a profit. If you place a trade here, your target is $10, right?
Yes, sir.
And your SL is $3, right?
Yes, sir.
So when you will drag the line, this is our trade, and my target is $100 profit. How much? $100. And I will check this level, how much it give me? $20, right?
Yes, sir.
So I need to more drag down. how much now I can get when the price reach here? $49, right? So when you will drag the line and you just to fix your cursor on the line, and it will inform you that if the price reach here, you will get this type of profit. So it is upon your strategy which you will use, that how much profit you are expecting from the market and how much you are expecting from the move. Then you set your TP as per your expectation, right? But if you are,
Yes, sir.
if your entry is here, right, and your SA TP is here, then when this line will be crossed, your trade will be closed. Even if it's moved too much down, you will be not benefited. Only this level when cross, it will be give you the profit, right?
Yes, sir.
Okay.
One more thing, sir.
Yes, brother. Yes, yes.
Sir, it is 1 minute candle.
Okay.
So if it go up, so how much percentage will it will get
Yes.
profit?
Yes, yes, yes. We are coming on it. How much we
Sir, one
will
question.
go? Yes, brother. Ask question.
Sir, to trade this crash boom, Forex trading experience or learning is not required, correct? Because I have no experience in Forex trading.
We don't require any other experience. Everything we will
Okay.
teach you.
Right.
From basic to advanced, we will teach you in this course. Don't worry. And we will
Thank you,
train you where, how to identify the entry point, where to enter, how to take the trade in the live market. Everything we will teach you. Don't worry.
Thanks, sir.
Because today is just an introduction. So it is very important how much you need to invest, how much you need to purchase, everything. This is very important. If I start from the logics, from the price action, then you will never understand how much I need the required deposit and how much I can expect the profit from my required deposit, right? So that's why this everything is important. The stop loss, the take profit, the margin, equity, everything understanding is very important. Okay.
Correct, sir. Correct.
So one more doubt.
Yes, brother.
So in this graph, how much you took for each lot? And can you explain me something here? There was a buy and sell and down something.
Yes, we will definitely, we will give you the idea what you are looking here. This is a downtrend or this is uptrend?
Uptrend.
Uptrend. The crash, can we sell in uptrend?
No.
No. When we will identify there is a downtrend started, there is a symptoms of the downtrend which is cleared, then we will start the selling, right?
Yes,
we will identify each and every entry point, and then we will enter the trade. Without confirmation, we will never enter the trade. So these all the topics will cover from the tomorrow. Tomorrow we will teach you how to draw the trend line, how to draw the support and resistance in the boom and crash. Everything one step by step we will teach you. At the end of the course, you will be able to take every time trade, right?
Yes, sir.
Okay, so don't worry about these things. Just focus on how much we are investing, how these points, the margin, these equity things are working with our entry, right? And understand the SL and the TP. And also, don't worry, we will give you all the idea where we need to enter and how to enter, right? Okay, come here now. Lot sizes, right? .2 lot. This is the smallest lot in the C1000, B1000, C500, B500. You cannot purchase less than 0.2 lot, but you can purchase more than 0.2 lot, right? So this is your minimum lot. This lot calculation, let's see. Each 1 minute candle, when you are purchasing 0.2, each 1 minute candle will go against in your direction, and it will be deduct from your account 0.1 $0.17. So 0.17 cents, right? If the entry is going against 30 minutes from your entry point, how much it will be? $0.17 into 30 minutes.
$5.
$5.1, right? $5.1. So 30-minute trade goes against your direction. How much you charged? $5.1 in a loss, right? Okay. Come here now on this slide. From here to here, how many candles are there? 68. The 68-minute going against you, right? And when the spikes start, in the 8 minutes, it covers how much distance?
68 minutes.
68 bars.
68 bars, it covers how much? In 8 minutes, right? And if you purchased here, right? So 68 minutes you was waited, the price goes against you. It can be the $10 approximately, right? Loss. When it recovers, how much in minutes recovers? 8 minutes, right? How much profit recover? Loss recover? $10 recover in 8 minutes. But if you have a good idea, if you select this area for the entry point, in these 8 to 12 minutes, how much you will get the profit of the 68-minute movement, right? So tell me, buy from here, waiting 68 minutes is better, or identify the level here and waiting 8 minutes and getting the 68-minute profit within the 8 minutes, which is better?
8
Sir, 8
second.
minutes is much better.
8 minutes is much more better, right?
Yes.
If you just to see here, from here to here, this movement is here, right? And this movement is greater than this movement, right? And how many minutes is there? 1 minute, 3 here, 4, 5, 6, 7, 8, 9, 10. In the 10 minute, how much movement is there? 2 hour movement. How many movement?
2 hours.
2 hour movement in a 10 minute. So that is the beauty of your trading spikes.
Maybe you can open the MT5 and just show them the illustration of 1 hour chart.
I'm showing them. Wait, I just want to clear some points. So here, if you are thinking that the market is moving in up direction, I want to buy in a crash. When you will buy here, a 30-minute market goes in your profit. You did not close the trade. When the spikes are coming down, right? In the 10 minutes, how much you are in a loss? Too much, right?
That's a huge loss.
When it will be covered, a one small candle, it will reach in the 3 hours, right? In the 3 hours, maybe it will reach, and then you will return your losses. So the buying in the crash and selling in the boom is very risky. Don't buy in the crash and don't sell in the boom. Only identify the entry points, go for the sale, because these spikes will give you too much amount, right?
Yes.
So this point, always keep in mind, don't go against the market, because when the price move up, if you get the too much big spike, which is equal to the 35 candles, then how much minute will move up? 35 minutes will move up, then you will get at the break-even point. So don't buy in the crash, right? Only sell in the crash. See here. So price is moving in against us, right? So I will show you that when I am buying the in the boom and crash, selling in the boom and crash, right? 0.2 lot, which is a very smaller lot. When this candle close, and then we will buy. And also we will buy on the crash 1000. The difference of the amount you will see. So we bought here. In the start, how much was cents? 3 cents, right? So 3 cents was your charge, which broker charged you. And here, crash 1000, I'm going to sell, right? 0.2. When I sold 0.2, how much it charged? More than this one, right? It means that on the crash 1000, the commission is greater than the crash 500. So here there are 0.7 commission on the 1000 and 0.3 commission on the 500. This commission will be added in your amount here, right? So when you will buy, you will be charged. If the trade is going against you, then this will be charged. When you will get the spike, it will turn into profit. If you want to close, you can close the profit. But every minute on the 0.2, it will be charged around the 0.17. So you calculate yourself that how much minutes you can wait. A 30-minute you want to wait, then it will be charged the $5.1. So this will be your SL, right? And 30 candles move down, but we will take 1:2. Then how much candles move down? 60. Then how much you will get? 10.2. This will be your TP. And this will be your SL. This will be your entry. You just set like this way. We will give you all the money management system when we will teach you how to identify the entries. Definitely we will give you the idea when to take the stop loss, when to take the take profit. But this is just a common discussion. I just to show you that when you will buy, you will be charged in a minus, right? Yes, Mithal, what the point you was telling me to show them?
No, I just wanted to convey the size and amount. If you go to the 1 hour chart and show them that the movement of crash while it is going up and how it is coming down.
Okay.
On
Yes,
the
yes.
hourly, on the
Okay.
hourly.
Okay, I understood. See here, brothers. The size of the candles you can understand. When the price is moving down in the boom, you can see the size of these movements. But when the price will move in up direction, it will cover immediately as compared to moving down. That is the point. So here, if I show you clear any picture, see here.
No, here it is. Here it is. Here it is.
Here I'm going to show them. Yes. Also, yes, here. How many hours it moved down? 1, 2, 3, 4, right? When price move up, how many hours it take?
1.
So 4 hours market move down. In the 1 hour market recover and it close above the levels, right? How many hours it move down? 1, 2, 3, 4, 5 hours. And how many hours it will cover?
1.
1. So it is better to sell in the boom or buy in the boom. What is better?
Buy, sir,
Buy in the
anytime.
boom.
Anytime we will buy in the boom. We will never sell in the boom, right? And
Okay.
on the crash 1000, I'm going to show you. Here you will find so many big candles, right? See these candles. From here, 1 hour, 2 hour, 3 hour. How many candles are there? 3 candles, 3 hours, right?
Yes, sir.
And if we start from here, at this point, we start, right? At this level, how many candles move up? 14. 14 candles moved up, and how many candles covered the 14 distance? 3 hours. So
3
what is
hours,
better?
3 candles.
To buy or to sell in the crash? Here, how many candles move up? 1, 2, 3. These 3 candles, how many candle covers?
One
One.
candle.
So when we will buy 3 hours, we will get the profit. But when we will sell only 1 hour, we are getting the 3-hour profit. So which is better? 1 hour, right?
1 hour. Yes.
So here there is no restriction. You can buy, but you know, if you bought here, unfortunately, you got the too many spikes and price move here. Now, how many hours you need to wait to price reach at this area?
3.5 hours.
4 hours.
4 hours.
3.5 hours.
And 4 hours, what you will feel? In the fear, maybe you will close the trade here, right?
Yes, maybe.
You don't know, because you will feel if the strong big candle appear here, I don't know, it will reverse back or it will continue down. So what we will need to do, we will make the strategies. In the crash, we will only sell. In the boom, only we will buy. These everything in the upcoming sessions, everything we will clear. Don't worry. You don't know everything. It is very good for us. You will be get that education we want to give you, right? Okay.
Yes, sir.
But one thing is, don't follow any strategy from the YouTube. It will blow your account. Okay.
Yes, sir.
And when you are not confirmed, don't buy anything or don't sell anything. Okay. Now here.
Yes, sir.
We have confirmed these things, that how the price is calculating, how the price is moving, these lots, how much we can purchase, how much we can sold. So when you will purchase the C1000 on a 1 minute, how many charge? You will be charged 0.16 cents per 1 minute. And 5 minutes, how much it will be? 0.8
0.8.
cents. And in the 15 minute, how much it will be? 2.4, right?
Yes.
So C1000 and B1000 is the same. And here on the C500, B500, it is a different on the 0.2 lot, right? So this calculation, I have a doubt. It can be different little bit. I will check it, right?
This is a tentative
Yes, sir,
price.
because it's higher. The charges are higher than the
Yes.
C1000 and B1000.
No,
Yes.
this is a loss calculation.
Yes,
See,
loss
if you spend
calculation.
this is 1 minute. If you spend 1 minute and it is going against you, then on the crash 1000, it will be 0.16 or 0.17 cents per minute.
Yes.
Yeah, loss. At the same time, crash 500 will be 0.25 or 0.27. Likewise, 0.20 or 0.17 on the B500 as well.
Okay.
So it
one
is a
thing-
variation.
Yes, one thing I'm going to show you on the chart, how it will be work for you. See here, brothers. When we will identify the trend, if we identify trend from here, right? See, you will never find the 30 candles in against you. How much it is? A 20 bar, right? You will never find more than 20 bar if you identify the trend. Within the minutes, you are getting the spikes. So from here to here, how many candles are there? We are going to count. From this point to this point, how many candles are there? 221 candles. If the price move against you, right? This will be like 180 or 200 around, right? And if you count these candles, it will be less than the 200. It will be only 100 maybe, right? But you can see how strongly it is coming down. Every spike, if you see here, this spike, and count the candles of this spike, then this is a spike from here to here. Then what will be? It is a 59 bar spike. A one spike which is equal to the 59 bar. A big spikes also you can get, a small spikes also you can get, but our aim is what? To identify where the spike will happen. And we will enter at the right point where the spike will happen. Right?
Absolutely.
Okay. So now there are some things which we will do and which we will do not. If you follow this chart, you will be successful trader. Right? If you are not analyzing, only just you have a hope, this hope will not work for you. So when you enter for the trade with the hope, you cannot get the spikes. You cannot get the good profit. Sometimes, maybe for luckily you will get the profit. Mostly you will lose the money. Don't take a hope. Must take an analysis. Confirm yourself as per your analysis what the answer is coming. Work with that answer. Don't take any hope. Right? Number second, if you are thinking on the demo practice, when you will do, a point will come in your mind that if I hold as much as longer, at the end I will get the profit. This practice is 100% wrong. What is our ratio? 1:2, 1:3, 1:5 we can do. If we are taking 2, we are waiting how much? 1. If you have a expectation of $10 profit, then only you can bear the $3 loss. But if your expectation is $10 and you waited, price moved against you $30, after that price moved down and give you the $10, this practice is not a good practice. Mostly, if the trend is changed, if it is not come back to you on your entry point, your account will be blown. You will not do this practice. When you place a trade here, price move up, again place a trade here to recover the entry, again price move up, and you are thinking, you have a hope that now if the too much price move up, definitely I will get the spike. I'm going to enter the third trade, then price will move down. This practice is very, very wrong practice. We are not taking the multiple entries. And don't think that these multiple entries will cover your losses. It will cover your more losses. No, it will increase your more losses. It will not cover your losses, right? So when you are placing the one entry, don't place the another entry in the sense that my loss will be covered because of the second multiple entry. Don't do right this one. Never ever enter the trade randomly without analysis. So if you don't analyzing and you are just hoping again and you are entering the trade, don't enter. You will be trapped. What is your deposit amount? Only take a 10% of your capital in a one day, not more than 10%. If you have a $50, if you lose today $10, then close your trading. And next day you have a $40 and maybe you have a fresh point on the next day and then you will earn $20 and recover the $10 yesterday loss and $10 more profit. But you just have a limit. Decide what the percentage of amount you can afford to lose for the one day, but don't lose all amount in a one day. Then another thing, when you are losing the 2 entries or 3 entries, and you are thinking that if I place a big lot, I will cover the all losses like a martingale. Don't do. It will not work for you. Do not increase the size of lot. Always place a trade as compared to your deposit amount. Don't go against. If you have a $50 amount, when it will double 100, then increase the size 0.2 to the 0.3. Till the double amount, don't increase the lot size. As much as small lot, small losses, small profit, which is accepted, right? Now what to must do? That is very important. Before going to the real account, you trade with the demo account. Understand the psychology of the market, how it is running, where I am weak. Identify yourself. Tell us, sir, I am weak here. What I need to do? We will teach you. We will support you. Okay? And then discipline required. The synthetic indices, if go against you, it can be possible that 3 days market cannot reverse on your entry point. So you made a discipline of the stop loss, of the take profit. When the price is not following you, you need to take a small losses and close the trade and wait for the right opportunity. The point number 3, always lock your profit. Identify yourself. You are a scalper or you are a swing trader. If you are a swing trader, your amount must more than $1,000. If you are a scalper with a small amount, you can trade, but then expect the small profits and lock your profit. Lock, how you will lock? You just to add the TP. When the price reaches the $10, automatically trade will close. I'm not greeding more. Greed is not required here, right? Don't take a greed. And then if you are scalping, take a few spikes, then stop the trading. You know, that is a cycle of the price action. Price action, how it's running? Market move up, move down, then move up, then move down. So if you take the profit on this cycle, definitely market will pull back, it will move down, and then it will move up. So if you are not closing your trade, the 50% market will come back and then it will eat your all profit. So in the scalping, take your profit, go out from the market. When again you got the entry, then you can enter. Otherwise, don't wait for the pullbacks. The pullbacks can be big. It will eat your all the profit. So when you set your target, definitely you will save from these pullbacks. So that is all about the introduction today. And this slide I'm going to talk. When every trader, he is trading, even he is trading the binary option, Forex market, or the synthetic indexes, what he is feeling. Who is there, who is feeling all these points? Nervous, overconfidence, fear, greed, anxiety, doubt, fearing of missing out. How many traders, all these points he is feeling? Can anyone tell me? Okay, we are going to start from Suryakant.
Yes, sir.
Suryakant, when
Sir,
you are trading,
yes,
you are feeling the nervousness,
yes.
overconfidence sometime.
No, sir. Overconfidence is not there because there is no proper strategy. So nervousness, fear, doubt is always there. These three are there.
And when you
And
are, when you are feeling anxiety, the increasing a disturbedness inside your emotions when you are feeling bad, right?
Right, right.
And sometimes when you think that I can enter here, because of the fear you did not enter and market move down, then you are fearing, oh, why I missed this opportunity? I need to enter here, but because of fear, I missed this opportunity and market move down, right?
Yes.
So these things we need to overcome. When we are good in analysis, no nervousness. When we are good, yes.
Harish is trading on movement crash. He can speak more about it.
Yes, yes, Harish. We are going to give you the opportunity to talk here.
Yes, sir.
When you are missing
First,
the spike,
I'm feeling.
yes.
First one, I'm feeling this one, fear of missing out.
Yes.
So sometimes with guts feeling, yes, I will get this one. I should have.
I bet 90% of people would be
here.
hearing that.
Sometimes overconfidence,
Yes,
losses
this is
because
the
of the
major
overconfidence,
things.
and sometimes losses are sometimes missing the opportunities because of the fear of missing out, right?
Yes, yes, this is the major thing which is affecting our trading performance.
And
everyone have knowledge and everything is there, but to put one to one together is very difficult.
So,
and main thing is overconfidence because of knowledge, and sometimes you miss. So market is open.
Yes.
Our mind is telling you you'll get opportunity, just hold it.
Yes.
But because of overconfidence, we are taking wrong trades and making losses. So this is the main thing I point out to everyone.
These are
discipline.
the main points, right?
If we keep discipline, yes, market is ready to give us.
Okay.
I would like to tell something about this.
Yes.
I would like to surely tell something about this. Right. So basically what happens is fear of missing out is this is happening to 90% of the trader, even they are pro. Because no one in the market wants to miss out the bigger opportunity. When impulse move is going on, the market moves like this and then like this, right? We want to eat this always we want to have this, but when we see this, we only see this once it is happened, correct? Now what we need to do is, in my practice of 1.5 years of trading boom and crash, what I have personally feeling is that confidence is what we are lacking about. Let's say, for example, if we practice a lot and do a lot of homework daily, after 1 month we would know that this is the point from market can make a move that I am expecting. Understand this very detailed in this, because this is very important. And there is a level up above here. There are two levels. I'm not sure if you can see my drawings.
You can
these
change
are
the
levels.
color. Yes, now it's okay.
These are the levels, right? The market is here, absolutely here. Now you are in a confusion that since the market is in an impulsive uptrend move, should I sell? Because the market is in uptrend. and you have a fear that what if it doesn't move down? What if I am wrong? See, understand this thing is very clear. You have to analyze the next point, next previous point. If you think that this is my next previous point, calculate your loss. What is the loss? This is the loss I am ready to take. Question yourself first. Okay, fine. If you decided that this is my $5 loss and I am ready to take, but this is not a forex market, this is boom and crash. So understand this thing, that if it spikes right from your expectation and if it spikes big, then you are already in big profit. So that is the judgment call you always need to carry around with you while you are trading on a boom and crash. Never fear out, never fear out. Calculate your loss and take decision. Do not just randomly enter. If you are ready for $5 loss and ready to take $10 profit, just get in. Just get in. Doesn't matter if it goes and hit your stop loss. That is your only one trade you are losing.
So here one thing I'm going to add. If you are thinking that only I will earn money from this market, then you will miss everything. Every point you will miss. And when you have decided that I will never lose in this market, only I will win. When the price will move against you, you will start the fearing. With the fear, when the price little bit move up, you will close the trade here, and then market from here, market will move down here, and then you will sink the fear of missing, right? So when you enter the trade, before entering the trade, decide $5, I'm ready to pay the loss. $10, I'm expecting the profit from this market. For example, when you will never decide the loss before entering the market, then you will never get the profit. This one. This is very important. And when you decided a $5 loss already, you don't have a fear, you don't have overconfidence, you don't have a greed, you don't have anxiety, you don't have a nervousness. What is the thing? Before entering, decide yourself how much I can bear the money in the loss. Then all these points will never hit you. But if you are fearing $5 is too much for me, but I want $10, because of these things, your decision will be wrong. Maybe you will fail. So in the course, we will discuss everything about these words, every topic, and inshallah, we will give you the full every education about overcoming all the reasons. Because when you have these reasons, you cannot be the successful trader. So our the planning is that we will out from you from all the fears, all these topics, because this is not a good for every trader. Okay, so here we are going to finish our introduction. If you have any other question, you can ask now. I'm going to answer you.
Okay, sir.
Yes, brother.
Yes, for the derivative account that we open a demo account. Are we going to download their empty file?
Yes.
Or we should download their empty file.
Empty file is very important because you will trade from the empty file, you will analyze from the empty file. Empty file have too much tools. You can see they have a web portal, but web portal have not all these facilities. So these tools will give you so many benefit. When you were analyzing the market, you will use so many indicators to identify the entry points, to identify the trends. You will use moving averages, everything. So this platform MT5 is very important.
Okay.
So download the MT5 platform and then log in your account in the MT5 platform. And every analysis you will use on the MT5, right?
Okay, this MT5 should be downloaded from their website, right?
Yes, their website. You can
Yes, yes,
download.
yes.
Okay. Okay.
Okay.
Okay. Yes, sir.
Okay. Any other member which have any query?
Sir,
no.
Suryakant here.
Yes.
Sir, I've seen some other than crash and boom.
Yes.
I've seen volatility.
Yes.
Volatility index? What is those?
These are also synthetic indices, right? The way of trading of these indexes is different than the boom and crash.
Okay.
These indexes don't have spikes. These indexes look like a Forex market. The movement in an up direction, the movement in a down direction, the lot size, the return ratio is different than the boom and crash. And these indexes, you need a candlestick psychology. You need all price action rules which we are using in the Forex market, right? But in the boom and crash, you don't need a candlestick psychology. Only you identify the reversal points, chart patterns, key levels, only these things. So these are the different type of market. In our course, we are going to cover the boom, crash, and boom 500 and crash 500. There are so many other indices. Only we are covering these 4 indices, right?
Right, sir.
Okay. Okay, so remember, this video is recorded. When it will convert, I will upload on the G drive. So every member, I'm requesting that send your Gmail address, and I will upload the video, and you can see on my G drive account. I will share the link. So we're going to finish here, and thank you so much. Yes.
There is one more thing, Ishak bhai.
Okay.
1 minute.
Thank you.
There is one more thing I would like to do is, I have given you a website link, right? Everyone are aware about that. TradingView website link, right?
Yes.
I think 50% of you are using that. Now, what I would like you to do is from tomorrow's session, since we are starting up with the chart, what I want you to do is go to the 15-minute time frame on any of the 4 pairs. Okay, go to the 15-minute time frame and draw the support and resistance levels and share on the group, the batch group. Okay. So for tomorrow, you will need to draw the levels on the 15-minute chart. Not below that, not above that.
Okay.
All right.
Noted.
So
Noted, Mr.
Yeah, all 4 charts, I need certain level of key level drawings, so that I can understand from tomorrow onwards. We are discussing about the price action and support and resistance and trend line. So trend line we would not need right now. Just do the support and resistance. Okay.
Yes, sir.
All right.
Thank you so much, Ishak sir and Mr. Mittal. Thank you so much.
Yeah, my pleasure.
Okay, thank you.
Thank you, class.
Thank you, everyone.
Thank you.
See you
Thank
tomorrow.
you.